Welcome to Morningstar. With me today is Andrew Mattick. He is Portfolio Manager for the Matthews Asia, China and China Small Companies Fund. So, Andrew, can you tell us a little bit about the fund's investment philosophy, please?
Yeah, sure. So we're growth at a reasonable price across the board. We'll invest in any part of the Chinese stock market. So that includes, Shanghai, Shenzhen, which is dominated by the Chinese themselves, and then overseas listed Chinese stocks, which obviously tend to get affected by foreign sentiment, both in Hong Kong and US listed ADRs. We try to keep the stock list as tight as possible. Yes.
So these are very difficult times for investors in China. What's your long-term sort of conviction for investing in the country?
Yeah, I think there's two parts to it. I think what's gone on, in the local markets, very much around, what Chinese people think about themselves. Shanghai, Shenzhen, local market, retail investors, zero COVID. When we came out of the lockdown, the sell-off's been largely driven by that year to date. On the other side of things, it's really more about regulation, the Chinese government, issues regarding maybe the perceived heavy-handedness when it comes to the regulation side. So, look, clearance on those two different things for two different reasons, will provide some positive momentum for the market.
So you're saying it's kind of a temporary setback for the case for China?
Yeah, I think on the local side, obviously the zero COVID Shanghai lockdown really has had an impact, not just in Shanghai, but broader China with supply chain, even with domestically. So I keep reminding people that it's not 2012 though in China. We're not facing all the issues, massive amount of corruption, anti-corruption drive and overinvestment out of the financial crisis. SOEs that had spent too much, if you want to put it like that, banks that had a lot of bad debt, local government financial vehicle debt that was out of control. So, structurally, China 10 years later is a lot better than that situation, just zero COVID. On the foreign side, the regulation, I think, this whole idea of making these platform companies' behavior a little bit better, I think we're getting to the end of that as well. So clearance there, I think will be a positive thing for foreign sentiment.
Thanks very much. So you also manage the Small Companies Fund for Matthews Asia. Is there a particular appeal that small companies have in China? Well, investors tend to think about the mega caps, but the smaller companies has a different sort of dynamic.
So I think, China is what it is, the center of manufacturing in the world. So what you get in that smaller mid-cap space, 1 to 5 billion market cap, if you want to put it like that, is the whole supply chain. And it's all listed in the Chinese stock market, in particular, mainland market, Shanghai, Shenzhen. So, when you rip apart the smartphone, the wind turbine, the solar panel, the battery car, the battery itself, it just goes on and on, the fridge, the air conditioner, you get a lot of the supply chain in China. And a lot of that exposure is in those smaller companies. Now, that's the upside. It's, there's a lot of really, really exciting growth areas coming, China's way, but, competition's rampant. You always have to look over your shoulder. So it's not all positive.
Sure, thanks. So you mentioned some sectors there. Are there any sectors you're particularly keen on at the moment? There is. I think when you look at the energy side, China's dependent on oil and gas. So geopolitically, economically, renewable energy, solar, wind, the grid that goes with it, high voltage power lines, so important. Then an extension of that is battery cars, the batteries themselves, right down China's alley, volume, economies of scale. One thing it beats the rest of the world in, has a good leg in that part of it. Automation, wage costs are going up in China. Automation is increasingly becoming important to replace labour in some of these manufacturing industries. And the last part maybe I would highlight was IT hardware and software. As a result of the geopolitical issues between the US and China, securing your hardware, securing your software, developing software outside of Western software, increasingly becoming self-sufficiency, geopolitically is becoming very, very important. So there are 5 areas. Maybe capital market reform, what's going on in capital markets, deepening mutual fund industry creation, increased participation by locals, that's just maybe another area. But there's a lot going on. Sure, fair enough. So thanks very much for your insights there into the Chinese market. For Morningstar, I've been James Gard.